for the foreseeable future, demand is going to crater. The average home buyer is afraid. The headlines, layoffs, yada, yada, yada. They're afraid. The average home seller is also getting more nervous and afraid. And the thing that I know about this combination of less demand, more supply is the percentage of motivated sellers go up, which means my percentage of disrespectful offers that get accepted go up. And 2025 should be, without question, the year of the investor. Alrighty, folks, we are recording this on Liberation Day. It's actually technically 8:39 a.m. Pacific. There is a lot of talk, a lot of chatter that this Liberation Day is going to send the U.S. economy into a recession. There is talk about the 10-year note going sub 4. There is talk about mortgage rates going sub 6 and maybe even sub 5 during the calendar year of 2025. So I want to ask the boys, what do they think? Do they think we're going to get mortgage rates sub 5%? Do they think we're going to have a recession? What the heck is going on Liberation Day, Matt?
What I can tell you is I think it's going to be very interesting. I think that when rates go down, we all know that prices stay flat. So, I mean, that's the good news about that, is that finally all these people that have been waiting are going to be able to buy. Of course, I'm making fun of them. And so I think that the real idea here is that still, if you like it, lock it. And if the numbers work, you buy it. And so do I think we'll get sub 5? We possibly could with buy downs and things like that. I'm doing a deal with Convoy right now. We're mid 6s, mid higher 6s, which is crazy for a 30-year fixed rate debt DSCR loan, right? Yeah. Especially when we came from a time where typically that was at least a point or two higher than market.
Oh, they were 8s. Yeah, they were.
Right. Which would mean that technically the real market or the other, general market should be at 4.75, 4.5. So it's interesting because we're watching a collapse there, a narrowing. And so I think it'll be really interesting to see what happens, over the course of the next 8 months. Tariffs and security of the market are certainly going to impact that. But I saw rates were down, and they're down around, I think 4.05 or 4.08. They hit this morning, I think. It wasn't an exact number on the screen. It was more a graph. So I think it was around 405 or 408. Yep. And then you figure that you're going to have, typically a 150 basis to 175 basis points on top of that. And that's what you're actually going to be getting, typically for a mortgage. So that puts you in the high 5s. And then with potential buy down, you can get into the 4s. So yeah, I think they've been higher for longer, like we all called. The question is, what do they look like in 6 to 9 months? Don't know. They could be down, but it's not going to stop me from buying a great deal. I know, because I'm closing on one next week.
Yeah. That's the beauty of, that's why I love this group. Yeah. Right. There's a lot of talk, a lot of focus on rates. It's an interesting concept. It will undoubtedly get lots of clicks. But a great deal is a great deal. Right. And the thing that I know about today's economy, I just had a conversation with a bunch of real estate entrepreneurs in Vegas yesterday. It's why I had the technical screw up on the daily financial news. And what I basically told them, and I made sure that they heard it, but I really made sure they felt it. And that's an important difference, if you know what I mean. Sure. And that is the fact that in 2025, for the foreseeable future, demand is going to crater. The average home buyer is afraid. The headlines, layoffs, yada, yada, yada. They're afraid. The average home seller is also getting more nervous and afraid. And the thing that I know about this combination of less demand, more supply is the percentage of motivated sellers go up, which means my percentage of disrespectful offers that get accepted go up. And 2025 should be, without question, the year of the investor. That's what I'm thinking. Dion, what do you think about all this? Economy, recession, interest rates, what do you got?
So first off, I talked in our previous video about how with a recession, I've specifically targeted properties that are in Class C markets because there's more demand during a recession, right? Now, more your Class A, Class B property owners or renters might step down to save money, which would increase demand. So the recession thing, we can't fix the world. Right.
Yeah.
That everybody watch you and be like, well, you don't want a recession. Of course you don't want a recession, but you can invest planning that one's probably going to happen. Right. They're cyclical.
They're natural parts of the business cycle. So it's not
a
like
feature, not a bug. It's like inflation.
Right.
It just comes right in there. So then when it comes to interest rates, it's more than where's the 10-year note, where's interest rates going to go. We have to think, is the Fed announcing QT or QE, because then lender margin might compress or expand. So you also have so many factors in there that I always go back to the Warren Buffett quote, that if I knew where interest rates were going to be in 2 years, it would have zero impact on my investing strategy.
I love that.
So with interest rates, here's what I do. Every time I get an interest, a mortgage, I treat it like a contractor. Now, you guys have larger portfolios, you've developed relationships with your lenders, and you actually have that relationship and you strengthen it and you negotiate. I don't do that. I'm still the 10 conventional loans in my name or less. I want my lenders to hate my guts. I want them to know every time they deal with me that they're going to get competitive emails from they're going to get shopped. And so I have the same order of operations where I start with a larger, one of the big three, Chase, Wells Fargo, Bank of America. They have the strictest lending criteria. Get qualified for what I can, get under contract on something, already have the email contacts for 3 different types of lenders. So credit union, broker, and then one of the mortgage companies like Velocity, Convoy Home Loans, or I use Fairway for the last 3. But and then I shop and I say, so my order of operations is, here's what the bank is offering me. Take it to the other lenders and say, if you can beat this by a significant amount, it can either be the interest rate or the cost to buy it down, so the rates or terms. Then if they do that, it goes back to the original bank and they don't have to beat the other offer. If they can match it, they keep my business. If they can, I haven't had offered that they would beat it yet, but my first few mortgages, the bank matched the other offer I got. And in the last ones, the other ones came in so low, the bank couldn't match it. And so they all know that. And so whether rates are higher or lower, whether lending fear is higher or lower, so that compression is small or big, I do the same order of operations because my interest rate doesn't determine whether I buy a property or not. My yield does.
Exactly. I love that. One of the things that's interesting, we're talking recession, we're talking interest rates, all of that. I got to tell you, as somebody who's been in the game in a while, none of that really matters. What actually matters is, are banks going to get more strict or less strict? That's what matters, because what we are running into is an environment where there's this commercial real estate overhang, specifically in these small and regional banks, right? I think it was 6 months ago or so, I kind of did some time looking through Wells Fargo, Bank of America, JP Morgan's loan books, and they don't really have a lot of this stuff. It's predominantly at the regional and smaller, community bank level. I cannot fathom that stuff not coming due at some point. Now, I could absolutely be wrong, right? They created that bank term funding program for 10-year notes when Silicon Valley Bank blew up. So they could absolutely create some program out of nowhere that values these assets at par, as they say. But I can't see that coming, but it is possible. I think the biggest question for 2025 is lending harder in the second half of the year or easier? Because that will impact us, right? We're all 3 of us are retired, right? We don't got W-2 jobs. We're likely, I think Dion's got one more conventional, I think he said, but we're going to be dealing with the DSCR world. And it is possible that the DSCR world blows up, right? A lot of DSCR loans went out for Airbnb. Airbnb is getting hammered right now. And if DSCR lenders take large haircuts on these loans, we might not be 50 basis points lower. We could be 250 basis points higher. So I think the most important question asked that nobody's talking about is, will lending get easier or more restrictive in the second half? Matt, what are you thinking?
Harder. Definitely harder. 1,000% it's going to be harder. It's going to be much worse. That's why what we talked about the last video, having those relationships. I don't have a W-2, but I have 4 small to mid-size market banks and credit unions, 2 billion, 3 billion assets under management or smaller, where I've got people that I can pick up the phone and I can go, "Hi, it's Matt," and they go, "Yeah, I know who this is."
Yeah.
And that's the type of thing that you're going to need to move things forward. I think the other thing as well is, having everything set up where you have basically had a conversation with a number of bankers, where you've given them a copy of your credit report, where you've given them a copy of, of your incomes, where you've given them all that information. That way, when I call and I need something, I can get a pre-approval letter in an hour or two, because they already have all the information. And still, speed matters in my market. I went and I looked at a 4-unit yesterday, and it had about 40 showings and it had 9 offers.
Oh,
wow. 9 offers. We just broke the record for the highest 4-unit sale in one of these towns, being just under $800,000. That same asset 5 years ago traded for about $350 to $400.
How many of those do you own? I'm just curious.
A lot of them, probably like 30 of them or so, 20 or 30 of them. I own a lot of those types of assets. Yeah.
That goes back to our previous video where we talk about inflation being your best friend when you're the
absolutely.
Asset owners win.
And people are like, well, yeah, but just because it goes up doesn't mean you made money. You're exactly right. I hate the PFS, the personal financial statement. It doesn't matter. But you know what has also doubled? The rents. The rents have also doubled. So that's the number I really care about, because that's the extra cash flow. And it didn't come at the expense of throwing grandma out on her ear.
Yeah.
It didn't.
Yeah. It's really interesting. Dion, you've done lending, you've done deals now for 10 to 12 years. What do you think? Do you think lending gets more restrictive, gets harder? Do you even notice? Like, can you tell if it's harder or easier when you get loans?
So first, I expect Matt to pull out a monocle next time he talks about rents.
Like a Monopoly guy. Yeah.
I'll get the top hat ready.
Which is actually a myth. He never had a monocle. But
I believe you.
Sorry. I think here's what the key is there's conventional and there's DSCR. And when lending gets harder, I think people really need to pay attention to DSCR, because just kind of being in the business, most of us have this mental assumption that DSCR costs a little more, has a little higher interest rate, more hoops to jump through. But there have been times since 2020 where the wave of DSCR, it costs less to get a DSCR loan. You get a better interest rate than you could with conventional. So if you're paying attention to this, sometimes you don't go DSCR because you're out of conventional, or because you don't have the debt to income ratio, or the salary, or the work history that they need. So that's the solution, is to go to DSCR in many cases. Sometimes you just do it because it's a better loan product. And if you're not watching, you might not know which way to go.
I agree with that 100%. I think a lot of people out there only know conventional, right? They don't even know. They think this DSCR loan is this mythical corner of the market, almost AKA hard money.
Right.
Dude, I talk to Convoy Home every Thursday. Shout out Jonathan Dustin. I think for the last 6 months, DSCR has been on par or slightly better.
It is.
Right? It's kind of wild. Yeah.
They actually beat one of my banks by a full point.
Shout out Convoy.
Jonathan did. He was great. We spent time going through the loan together. He's absolutely fantastic, super knowledgeable. I talked to one of my banks and they said, yeah, we're going to be at like 7.7. And I was like, so how do you say that the bank is struggling and you're in trouble without saying the bank is struggling and you're in trouble?
Yeah, exactly.
And she goes, what? And I go, oh, if you can't figure it out, you're screwed. If you're at 7.7, because no one's buying through you. But to Jonathan and to Convoy's credit, they do a great job of finding the counterparty. And what most people don't understand about that is they're looking for people that are looking to buy mortgages. And so they dictate the terms. And that's what Jonathan and Justin do such an amazing job of, is finding the counterparties that will buy these types of loans and expect a much lower return than what a lot of these other vendors do. So kudos to Convoy. It's been an amazing process with Jonathan.
Yeah. Just to clean up the names, Jonathan and Dustin.
Dustin, sorry. Yes. I worked with Jonathan, if you couldn't tell.
Yeah, no big deal. Yeah, Jonathan actually works predominantly with the One Rental at a Time crowd.
Yeah, he was great
because he loves the crowd, and that's pretty awesome. Well, again, folks, I think as we get through 2025, I have really two messages. One, not many people are going to enjoy 2025 from a real estate market. Agents, brokers, appraisers, yada, yada, yada. But real estate investors, you should be salivating, especially if you're a real estate investor where you only need one deal. If you're a big shot like Jason or Adrian or Omar and you're doing dozens of deals, okay. But if you're a real estate investor like most people, like I was for most of my career, where you just want one deal a year, 2025 is it. Get a buy box, get focused, understand yield, go write lots of disrespectful offers. It's the time. Less demand, more supply. That's when we win. Dion, closing thoughts?
So whether lending gets harder or easier or interest rates go up or down, I think you need to focus on how you become bankable. If you're looking for a conventional loan, work in the same field for at least 2 years, have a good credit score, work on your debt to income ratio, get rid of some of the worst debt that you have. If you're looking for DSCR, you might have to grow up and make a grown-up piece of paper called a personal financial statement that I never made until like 2 or 3 years ago when I reached out to Matt and said, how do I do this?
Yeah, what is this thing?
and with the personal financial statement, yeah, they're kind of looking at a few things. They don't look at your work history, your salary. They do look at your credit score. So conventional or DSCR, work on your credit score. The thing that trips up a lot of people with DSCR loans is they look at your net worth. And some lenders want you to have 50% net worth of the loan you're getting. Some require that your net worth is 100% of the loan you're acquiring. So there's things you can be working on to make yourself more bankable, whichever way you go.
There you go. And Matt, closing thoughts?
Yeah, I mean, you're gonna be alive in 5 years, like Dion says. Start investing like it, and quite frankly, rate, price, none of that stuff matters. What matters is how much you're gonna get for a return on your capital. That's what really matters. It's your yield, it's your return on capital, how much moolah ends up in your bank account at the end of the day. 9 p.m. Thursdays, let's come talk about it, and I might make fun of you. There's a fairly high chance of that occurring on the Lumberjack Landlord at 9 p.m. Eastern time on Thursdays.
Folks, and don't forget, Bigger Pockets keynote presentation, day 3. Dion is going to bring the house down. I believe his discount code of Dion50 is still valid. If not, give it a shot. Guys, take care. Have a great week.
Bye, guys.